Okie dokie. This video is going to be covering a property purchase with a loan and a construction loan holdback. Let's take a look. Okay, we're going to start with a settlement statement, and we're looking at the buyer's side. This is for the purchase, and we're going to walk down the settlement statement and book it with a journal entry. Now, I'm going to be using probably the chart of accounts as well. And why don't I see journal entry here? Okay. Strange and bizarro. Or else I'm just missing it. Interesting. Okay. Also, first I'm going to turn on classes. Let me just maximize this so I can see what I'm doing. Okay. I'm going to turn on classes. We want to use that for properties. Okay. Back to our journal entry. And let's go to the settlement statement. Where'd it go? I lost it. Okay, there we go. First account we're going to book. Looks like we don't have classes in there. Let me try that again. And still don't see class. Oh, there's class. Okay. Looks like we're going to have a little bit of a problem here. Let's divide it up a little bit differently. So we only need a little bit of this. Okay, that's better. Okay, first, the property. I'm going to create this in the chart of accounts. And I'm going to make a parent. And you would do land and building possibly, but we're just going to do this for now for simplicity or illustration purposes. Let's make this a fixed asset building. Okay, that's our parent account. And this, let's just make this the building. And I'm going to put it all to building for right now. It's a sub account of property. Okay. So that's our first line in our journal entry. And we're using the balance sheet approach this time. In other words, we're saying this is a long-term hold versus a flip. It's something that we're going to be keeping for at least a year. So we're going to be booking fixed assets to the balance sheet. If you're doing a flip, you could do that to the income statement. So first, we're going to do building. Okay, and assets have a normal debit balance. We're debiting. And this is the contract sale price. Class. Haven't added those yet. There's our class is the address. and everything will, or most everything will have a class associated with it. Okay, so we have this booked. Next, we have the construction holdback. So let's go ahead and set this up. This is going to be an other current asset. So we're not actually going to get the money now, but it's going to be booked at closing. When we draw from it, that will reduce the asset. So I'm going to put this. By the way, even in regular your QuickBooks account, not a test account, it's usually smoother to enter accounts directly into the chart of accounts instead of the other places. Okay, so this is going to be debit again. Other current assets have a normal debit balance. Okay, and this is directly associated with the property on Main Street, so we want that. Settlement charges. Now here's where we need to get a little bit more detail. So let's go ahead and put in another category here. This will be closing costs. This will be, let's make this fixed assets. This will be a sub-account of property. Okay. So over here, let's go ahead and book our closing costs that will be capitalized. So we don't want this whole amount to be capitalized. So we want to go down and take a look here. What is going to be capitalized? Well, the 450 commission plus the $295 plus the 20 plus the 1937 plus the 300 plus 125 plus 363.50 plus 5200 plus 1300. Okay, those are all our closing costs. And you can always double check it in your Google Sheet, clicking these. Let's make sure we get the same sum. What do we get? Got same sum. Perfect. Okay, these are our what do we say? Commission and title charges and government recording and transfer charges. Okay, directly associated with the property, yes, put in the class. Okay, so again, we're making up these settlement charges. I mean, we're accumulating them. We want to get to that 19,432.45. So let's see what else we need to account for. Let's talk about the loan fees. Let's add those. So loan fees, and let's make these intangible asset to be amortized. We'll make that sub of property. Okay, so we have loan fees, and that will be our all of this. This time I'm just going to go right to the spreadsheet. That's 5615. Okay, so this is items payable in connection with loan. Again, it's only for one property. Directly associated with that, we enter the class. Okay, and then we're still getting to this 19432, the escrow amount. Actually, first let's deal with this insurance. So this insurance is paid at closing. So it's actually an expense. We have insurance. Yeah, let's just put insurance 2682. This is items, or let's just say hazard insurance premium paid in advance. And is it for specific property? Yes. Okay, next is the escrow amount. I'm going to create this. This is going to be taxes and insurance escrow. This is an other current asset. Perfect. Taxes. Okay, and this is this total here, 1144.95. Okay, we can also see that on our mortgage statement. This is reserves. Executed with render. And yes, it's for a specific property. Let me see if I can show you quickly. Yeah. Okay, that's all right. We'll look at that statement later, maybe. Okay. So now all of this should equal our 19,432.45. Let's see if that does. So we have 99.05 plus 5615 plus 2682 plus 1144. Yep, perfect. So now we've accounted for everything that makes up those settlement charges. Now we have some taxes. These are, we'll call them property taxes. And we'll enter a separate line for each one to make it clear. So we have property taxes paid. So these were paid by the seller in advance. Now, as the buyer, we're paying them, so we're going to expense them. City. Again, specific property, yes. County. And school. Oops. Okay, got those expensed. now we have our deposit or earnest money here. Let's go ahead and set that up. This is also going to be another current asset. So of course, this would have been already paid, and then this would be decreasing or clearing the asset. And yes, it's specific to this property. Okay, so you can see now we're starting down the credit side. Okay, and then we have our loan. And 255. Yes, specific to this property. A couple of other items here. We have rent. Let's go ahead and add that account. So this is rent that the seller has collected as income. Now it's our income, the buyer's income. Yes, specific to that account. And then security deposit. This is a liability. It's usually, that's presuming it's refundable. Usually it's refundable to the tenant. So it's a liability. It's not our money. It's not the buyer's money. And that's 485. That's being transferred from the seller. And yes, it's specific to this property. Okay. And now the test. We have cash due at closing. This should equal, let's make sure this is correct. Yes, yep, and that equals. So this is going to be cash at closing. And from the checking account, do we want that checking account transaction tied to the property? No. Okay, so our journal entry balances matches the settlement statement. Let's go ahead and save this. And let's take a look at the reports, starting with the balance sheet. Okay. Construction holdback, exactly as we'd expect. Purchase deposit is negative 15 because I didn't enter the previous transaction of 15, but that would just be zeroed and cleared out. Escrow deposits 1144.95, just as we'd expect. Let's go down to our property, our building, closing costs, and loan fees. Let's go ahead and look at this by class. Okay. And there we go. We're seeing 123 Main Street, building, closing costs, loan fees, total of what's capitalized. Anything else? There's our loan. There's our security deposit. Okay. That's it for the balance sheet. Fine. Okay, and yeah, it's a good idea to save your reports by property. That's great. Balance sheet for Main Street, balance sheet for North Street, etc. So let's look at our P&L. We have rental income like we expected. What else did we book here? Insurance, our insurance would be part of that. We can drill down and see it just to make sure it's in there. Got is that 2682? There we go. What else? Anything else in there? Property taxes paid, just like we expected. And I think that's it. That hits the P&L. There we go. Booked per the settlement statement. And good idea to attach the file, attach the settlement statement to the journal entry as well for quick reference.